Hello and welcome to a brand new week. It's Monday morning. It's pouring outside in Mumbai, but it's all eyes on D Street. It's going to be a busy week. Earnings season kicks off. Budget dates are announced. FIs are getting excited about India. There's so much working for us.
Yeah, we are a full house today as well after a while.
Yeah.
So,
unless you're planning a leave anytime soon.
Not until the budget for sure. Anyways, welcome back. How was your holiday?
It was good. And I can see so much action in the last 1 week.
In Thailand, you mean?
Of course, at the holiday, but in Bombay, in Dalal Street, what exciting times. I have come back, of course, to heavy rainfall. I'm just going to pull up some of those waterlogging shots. Hope everyone has gotten, will be getting to work safely. And, of course, all of us got to work safely. But it's just ridiculous how one night of heavy rains and once again, maximum city, financial capital, is completely inundated. So, I mean, that's something to talk about. We keep talking about the markets and economy and GDP, but this is what needs to be fixed. But nevertheless, having said that, it's going to be an exciting week for the reasons that, Samina has also spoken about. And I think the budget dates being announced over the weekend is also exciting. So we know 23rd of July, the budget will be presented. It's going to be a record 7th budget for Finance Minister Nirmala Sitharaman. We'll be doing a piece on that, on what is there to look out for. So stay tuned for that. Let me just start with the setup for the global market. So the week has been good overall. I think globally also it's been good overall. Look at the kind of close we had on Friday in the US markets, record highs, at least for the S&P 500 and the NASDAQ as well. In the US, jobs data is what really did the trick. And actually unemployment has come in a little higher than expected at 4.1% versus expectations of 4%. Remember, you've had revisions for earlier jobs data as well. Even the non-farm payroll data has come in higher than expected, 206,000 versus 190,000. So all of this altogether, net has raised hopes of a September rate cut. You saw your 10-year at a 4.27%. So all of that is setting up well for a bull run to continue this week, although perhaps a little tepid at first at the start of the day. We just take a look also at what's happening with crude. Now, so crude has been trending upwards, and in fact, there are several forecasts that you could hit $90 a barrel on Brent this quarter itself. So crude perhaps not the greatest story as far as we're concerned, but not too distressing as well, I would say. Asia is one to watch out for, opened mixed and continues to be on a downward trend right now. Remember, a lot of key data that Asian markets are looking out for as well. You have US inflation, you have China inflation all later this week. US inflation on Thursday, China inflation on Wednesday. And also, how exciting has it been politically? Joe Biden says, I won't go. The far left, swoops in France, and the far right gets pushed back. Rishi Sunak booted out. So, so much is happening there as well.
In France in particular, I mean, imagine the first round, the far right coming so strong, and then coming in third, far left, I mean, at the second round is quite something. But, I thought in some sense UK was astounding as a reaction, because world over we are seeing far right sweeping, and then suddenly comes UK and
then France
14
as
years
well.
of,
France as well.
It's mixed right now.
Yeah, it's also it's an exit poll. So if you want to remember what has happened with our elections, take exit polls with a pinch of salt.
I don't know whether either of you watched Rishi Sunak's outgoing speech.
And
it was truly very heartening, and it was just full of gratitude for some reason, right? So he did say that the country has voted change, and I think the biggest talking point in the UK is change. Any change is okay as long as there is a change.
Yeah, so it's quite something. But by the way, just one more thing. I mean, the big headline over the weekend also is that we finally have a date for the budget. It's July 23rd. I missed it.
I mentioned that. That's the big one. No, absolutely. And I think now we can get ready for, as you say, all the kite flying stories.
I'm telling you, you mark my words. But I'm not blaming anybody. And just that it's our duty as journalists to report what we find and what we hear. But it'll be interesting to see. Anyways, as Tamanna said, Asia is all over the place. But here's what our markets could be like. On Friday, we were talking about this, that Multiple quant indicators are indicating some bit of a possibility of a pullback. Bank Nifty showing that. And even for the Nifty per se, if you're an index trader and looking at the Nifty, based on various technical as well as the call options written, I think there's a cluster of 24,450 or thereabouts and 24,570, which is likely the key resistance zone if you are looking to indeed trade on the upside. So that's the first thing to keep in mind. But what could be the principal reason for this? The Bank Nifty. There is now evidence that the Bank Nifty is shown the negative divergence, bearish divergence, and is showing a temporary pause. Yes, HDFC Bank was the culprit on Friday, albeit on Thursday as well, but it is not going away anytime soon. And looking at the kind of numbers that have come out, and we'll talk about them in just moments from now, there isn't too much of optimism around banking results thus far, save for one or two. So very likely that the Bank Nifty doesn't have fundamental legs on which it can really move higher. So that's the other thing. A lot of talk around so many stocks at 52-week highs, but if you just map for the number of stocks which trade at 52-week highs, pure arithmetic, it is lower than the peak of February 2024. And so in some sense, the mania at the mid-cap and the small-cap end is probably not as high as it was, say, a few months ago. And if indeed energy and IT can take over the mantle from banking, then the index might still hold up in good stead. Remember, Friday, IT kind of stayed very flat. The key is whether they can show in the numbers. A lot of fund managers believe that IT could actually start doing well. People are pricing in a BFSI rebound in the US, and energy showed its mettle in Friday's trade. Reliance and ONGC perked up in trade. Can they do more? I think remains to be seen. The only sector which seems to be now turning a bit for the worse is autos. There was a article which showed that the car inventory or the four-wheeler inventory is really piling up. In terms of rupees crores, it's at multi-month highs as well. And these stocks have really outperformed. I mean, Tata Motors, Maruti, M&M, all three have outperformed the Nifty on a 6-month and a 1-year basis by a country mile. So in some sense, there is a bit of outperformance, and if indeed the numbers start slowing down a little bit, it could be a bit of an issue. So that's something to keep an eye out for.
Yeah, well, Niraj, I get your point that there is some exhaustion at high levels, and we've seen that. But the fact remains, on Friday's close, the markets recovered quite well from the day's low point. And you want to keep that in mind, because that may be an indication that the bulls are still in control of the markets. The Nifty recovered 150 points to close at 24,300 for one more session. It was a gain of 22 points point to point, and it's up about 1.3% for the week. So you can see the recovery coming in. There is signs of exhaustion. No one's arguing that. But what's happening and working for us is the fact that the sector rotation. So every time, and Niraj mentioned this, that Bank Nifty is also showing a weaker sort of movement. For the week, Bank Nifty, yes, has underperformed, but let's not forget, for the last 5 weeks, Bank Nifty has had a strong run. So while we've seen consolidation in the Bank Nifty space, it must be noted that for the month, Bank Nifty is up 6%. So profit taking at higher levels, but what the market really is doing is making a step in front, consolidating, taking stock and moving ahead. At least that's what we've seen in the last few months of trade. The other point that stood out for me is that broader markets have once again started outperforming. And this comes in despite the fact that DIs have been selling and FIs have been buying. Usually what we've seen is that if FIs buy, and this is what data is indicating, that FIs have been aggressively buying into Indian equity markets, it's large cap that takes the lead. In the last week, it was the mid and the small cap index that did see a return of flows. And in fact, for the last 1 month, your small cap index has gained about 10%, and the mid cap is up 8%. The index itself has also had a phenomenal run, to say the least. For the last 5 weeks, which has seen the Nifty go up, it's up 8%. So just quantifying all that, just to get a grip of what really is happening in the market. There is a little bit of sector rotation. So IT, pharma are sectors that are seeing some buying, defensive, and I know we'd like to talk about that too, given that the budget is around the corner. Fertilizers, railway. So while banking may take a step back, it's going to be these sectors that could lead the way up. Tamanna mentioned that there's a very good chance that you may see a rate cut in September. And we even noticed last week that the inflation data from the US came better or came in line with what the Fed is comfortable with. Now that tied with a weaker employment reading from the US is a very clear indication you'll get a rate cut. If you do get the rate cut, what happens to Indian equity markets, emerging markets? We get excited, and sectors like tech may continue to see a resumption in rally. So while there's a bear case, I think I'm going to be the bull this morning. For the week, I'm exactly.
I think so. Another one I just wanted to mention last weekend, which was very, HDFC Bank was a downer, but I think RIL.
Yeah, there's always somebody coming in to support the market.
Considering the weightage of both, I think it was RIL last minute with that sort of saved the day on Friday as well, and that whole buzz of a listing, a possible listing, I reckon will continue this week. And the big story, of course, all of the business updates, which is where we come
We'll quickly
to
go into that, but also 24,500. If you look at options data, 24,000 is a key level of support. On the upside, 24,400 to 24,500 is the range that the bulls will attempt to take out. Lots of things ahead. I'm just going to quickly highlight the week ahead before I go into stock-specific trade. We've talked about this enough. It's all eyes on the budget, which announces on the 23rd of July. Apart from that, you've got earnings season that kicks off. So TCS will report its first quarter numbers on the 11th of July. This is followed by HCL Tech on the 12th. You've also got Avenue Supermart that will report on the 13th. Apart from that, in terms of data, Indian participants in the bond and debt market will eye inflation data, which will be releasing on the 12th of July. You've got IIP along with manufacturing data also expected on the 12th. Bank loan and deposit loan growth is also expected. Foreign exchange reserves, it's a very important trigger for how the bond markets have been behaving recently, will be released by the RBI on the 12th of July as well. In terms of global cues, Tamanna has already highlighted what the markets are watching out for, but 9th and 10th, the markets globally will be watching out for the Fed Chief Jerome Powell's commentary. He will be delivering his crucial testimony. So that will give us another indication of what's expected on the rate cycle. Apart from that, in terms of data, for the week, FI activity is going to be crucial to watch. The DIs, remember, booked profits in the previous week. They sold equity worth 385 crores, while FIs actually aggressively bought in equity markets in the last 1 week. The VIX has dropped by 8% to 12.7 in the last 1 week from 13.8. And the put-call ratio is once again favoring an upside move. So that's what I have in terms of what you want to watch out. Earnings, most important, followed by economic data points locally and internationally as well. In terms of stocks, we'll quickly run through those as well. I have three that I am going to be watching out for. Signature Global. Now, this one's been quite a performer last week. We caught up with the management. They believe, and they've indicated that Gurgaon is where they've seen a big project, 8,000 crores of complete sale they're expecting toward in the current calendar year, and those pre-sale numbers are phenomenal, to say the least. They've seen a pre-sale growth of 255% to come in at 3,000 odd crores. Area sale has increased by 123%, and collections have grown over 100%. So this is one of the best numbers that Signature Global has posted. The other one that stood out for me, which some of you may argue that may not be, it may have been known to the markets, is what's happened on Bandhan Bank. Well, as expected, the CEO has stepped down, which was no surprises there. Remember, this was in the expectation about 3 months ago. Mr. Ratan Kumar Kesh has now been appointed, but let's not forget that up until last week, there was no successor to the outgoing CEO. Mr. Babbar, who was from HDFC Bank, had been hired very recently with the bank. Some part of the street was expecting that he would be taking on, but that's not happened. Ratan Kumar Kesh has come in as an interim CEO. There was also a comment by Suresh Ganpati of Macquarie, where he said that the biggest problem currently with Bandhan Bank is that there are no sufficient internal candidates, individuals who've known the bank long enough or served the bank, and that could be a little bit of a disappointment for the street. The search is still on. The hunt will go on, but for now, Bandhan Bank could be on the sell side. The other one to quickly track is Bank of Baroda. Those numbers they've raised funds. They've talked about aggressively allocating those funds, but 7,500 crores via debt capital instruments is what has been approved. 10,000 crores through long-term bonds for financing infrastructure and affordable housing. Sorry, it's a little bit of a long list with the week ahead, but it's over to you.
No, absolutely, because so many business updates, and typically Monday is that kind of a day when you have 3 days of post-Friday evening, almost 3 days of updates coming in. Remember, we're also setting up for corporate results. And so, Samina, you spoke a bit about banks. that's going to be the iffy one. Do banks really perform or not in these quarterly results? But I reckon the other sector is going to be FMCG, and I've picked a couple from those. Marico is the first one. And remember, FMCG in focus because management of all of these companies have been consistently talking about a rural recovery that they're seeing. So does this show in Q1 is the question. With budget around the corner and an expected push to consumption, will that happen? So let me start with Marico. Their international business delivered a double-digit constant currency growth. Their consolidated revenue grew in high single digits. They expect consolidated revenue growth to trend upwards towards the year, gross margins to expand, operating profit expected to grow slightly ahead of revenue, and they see marginal inching up of operating margins. There's a Citi note as well on Marico that says that FY25 has begun on a positive note with a sequential uptick in domestic volumes, continued double-digit growth in constant currency. Parachute volumes have grown in low single digit, but offtakes were strong. Saffola edible oil volumes have also grown mid-single digit, which shows stability and consumer pricing. Value-added hair oils still remain under pressure, and foods and digital-first brands sustained robust growth momentum. So I would say largely in line with what is expected on Marico. Dabur also decent in that sense. Badshah Masala is expected to post strong volume-led growth in high teens. And I think this will be interesting because with all of the focus on masalas, branded players might really benefit Dabur, one of them. But they have said that they saw sequential improvement in demand trends with rural growth picking up. And I think this is important. This is going to be one theme to watch out for with other players as well. Adani, Wilmar, etc. in their business updates have also, shown a similar story. And those came as well over the weekend. They say they expect improvement to accelerate in coming months. This is Dabur. And consolidated revenue is also expected to register mid to high single-digit growth. India business is expected to also record mid-single-digit growth. Now, mid-single-digit growth for this category of companies is not half bad, is the point. Bajaj Auto is the other one.
That all of those companies are talking about gross margin expansion, which I thought was very good during the year. Dabur, Marico, Adani, Wilmar, everybody talking about gross margin expansion, which is also good from since we're looking for categories which should take over the mantle from banking. Hopefully, FMCG also does that with the margin expansion.
Yeah, but FMCG is one of those tortoise in the hair stories, how long are you going to wait for the tortoise to catch up? That's the only problem with FMCG. But yeah, in focus today, I would say, at least, that sectoral play is going on. You spoke briefly about autos. Bajaj Auto is one which I wanted to talk about. And this is an interesting one because, of course, they have a category-busting launch, right? So a completely new category with their CNG launch. Couple of notes this morning. I want to quickly go through them. There's a Nomura note, there's a Novama note, I think there's a Jefferies note as well. So Jefferies on the CNG bike launch says they maintain a buy, increased their target price to 11,630 with an upside of 21%, because they say that even though it's priced 15 to 20% above a petrol proposition, that is the CNG bike is 15 to 20% more expensive than the petrol proposition, it is going to be attractive, obviously, because fuel prices are not going down at the pump anytime sooner. Share of CNG has already climbed in passenger vehicles at 15% and 60% in three-wheelers. You see the lines outside the CNG stations. I think that's the only hiccup for a category like this. Do you have enough infrastructure for fuel filling, etc.? Nomura maintains a buy, sees an upside of 8%. Their target price is 10,207. They say that the management is guided as 70% of 900k motorcycle market in this 100 to 125 cc space. So the fact that they've launched this ahead of others is a head start that they're seeing. Bajaj Auto definitely in focus today. Look at Novama's target price, 12,000 versus 10,340 earlier. So they also have a big target price because they say there's a huge addressable market for CNG motorcycles, and built-in volumes by H2 of FY25 are expected at 10,000 units per month. That's not half bad at all. I mean, it's an experiment, but Bajaj Auto seems to have taken the lead as far as this entire category is concerned. The other one really is, I would think why this is also interesting is because if the government wants to push cleaner energy and fuel, and now the demand is, now please cut GST on these categories, if that does come through, then you have a further upside there.
Yeah, certainly watch out for Bajaj Auto. Remember when Bajaj Auto launched on Friday, the supplier, Shriram Pistons, also went up about 5-6% because of being the supplier, the sole supplier to CNG bikes. So I think that kind of excited the street. So watch out for Bajaj Auto for sure. Speaking of autos, watch out for Tata Motors. The JLR Q1 wholesales have come in. I was speaking to Puneet before this as well. The fact that Jaguar is not doing anything at all, right? The ICE mix of Jaguar goes away because they are revamping that for all new EV portfolio. The numbers are not expected to be that strong throughout the year, but they've clocked in a number which is positive, and therefore this might just please the street. So do watch out for Tata Motors in the session today. The numbers seem good relative to what was estimated, but just that the stock has rallied so much that the street may not really find too much of favor with going and increasing the targets on Tata Motors further. So that's the first stock on my radar. 3 large caps on my radar. The second one is Titan, which unfortunately might see a bit of a hiccup in the session today because the numbers were both in absolute terms and relative terms not very good. So jewelry business grew just merely 9%, variables about 15%. The expectations were a lot higher. So not only have the numbers come in below estimates as far the Q1 update goes, but it's also paled relative to what Kalyan Jewellers has done. And Kalyan has actually done very well. So is it size that is hitting Titan? Is it something else? Remains to be seen. The stock has now underperformed from 3,700 to 3,300 while the Nifty's marched higher. So Titan has shown that relative underperformance. Can it get hit a bit more today is the question to be asked. And, it's not a category loss. Remember, it's Titan which is not done well. So let's wait and watch. There was a note that I read which said that it's because on account of gold prices, but then that argument should hold true for Kalyan and others too. It's not. So therefore, watch out for Titan. And lastly, banks. We've spoken about how banks are hitting a bit of a pause button. IndusInd Bank was okay. Not a bad set of numbers, but not that great either. And which is, I think, brokerages are saying that they've done okay. They would have hoped for more. The internals might be a bit shaky. May not be the best of quarters. They still have a buy rating because IndusInd Bank is way off the valuations, but not the best of quarterly updates for sure.
Yeah.
Just a quick one on Nykaa. I don't know whether we mentioned this one, but the business update has come in from Nykaa. Numbers weren't too bad in terms of what the expectation should be from the earnings season. Their consolidated entity has grown about 20 to 23%. GMV, which is a gross merchandise value growth, is expected to be in mid-20s. Beauty revenue vertical has also grown in that range, 22 to 23%. Fashion vertical has also delivered a growth of 20% despite challenges that this vertical is facing due to limited weddings in this season. And also, let's not forget that these are the updates that we're getting in, and this is despite the fact that physical store sales have actually seen a decline on back of a heat wave and elections in North India. So I'd watch out for Nykaa as well. And while we talked about a few companies, a few that are in the F&O ban is Aditya Fashion, Bandhan Bank. So watch out for this one. On that news development, you may see selling pressure, but that may be limited because it's gone into the F&O ban. GNFC, Hindustan Copper, India Cement and Piramal Enterprise are the 6 stocks that are in the F&O space.
Yeah. Just on Nykaa, I think it's with their business updates, I found it very interesting that they've launched a subsidiary just to focus on GCC markets. And they aim to capture 7% of GCC markets. I mean, I'm not sure how, because that's a very, very competitive space as it is. But Nykaa is foraying there and looking at setting up actual brick and mortar stores there as well.
It's very interesting because countries like Oman don't even have Amazon because they don't have a postcode. I don't know how Nykaa is going to beat the logistical problems over there, but
No, they want to set up stores as well as online.
Okay.
Physical stores as well as online, but they have looked at 7% of that market, so I thought that was interesting.
That's significant,
Yeah. Tata Steel is the other one. Tata Steel actually has pretty good business update, so I think that's one we should put on your radar. Their Indian business reports their best ever Q1 sales. For this quarter. Crude steel production is up 5%, India delivery is up 3%, UK liquid steel production is down 20%, and UK delivery is also down. But the UK business has been a problem for a while, but the India business I think will see maybe some uptick. Info Edge, I know it came at 3 p.m. on Friday, but I think you might see some reactions today as well. Because their standalone billing for Q1 FY25 is up 10.8% year on year, which is not half bad. Segmental breakup is also interesting. Recruitment business is up 8.5%, 99 acres up 10.4%, and others up 28.6%. So watch out for Info Edge. Just one more very quickly is Philips Carbon Black. They've gotten a patent for an invention called hybrid carbon black grade. Which improves the performance of rubber compound. But considering that it's a patent for an invention, you might see some action in Philips Carbon Black as well.
Yeah, and then of course stocks like Adani Wilmar will react because volume growth at 13%, branded exports volume growth at 56%. So that whole FMCG argument that we were making of what some of the businesses are doing very good. NLC India has emerged as a successful bidder for the Machakata coal mine, which has got a reserve of 1377 million tons and peak rated capacity of 30 MTPA, could be in focus. AU Small Finance Bank gross advances are up 4.9% sequentially. CASA ratio at 33 versus 32% sequentially, could be interesting. And Kalpataru projects, wherein BOB and other lenders have filed a debt recovery application, and the company owns about 49% stake in Kurukshetra Expressway. So I think watch out for that as well. But we've done enough on this very long word, but just the number of stocks that deserve to be mentioned. But politics cannot be out of favor, Agam, and that's the one piece that we're doing on Editor's Cut today, or maybe not politics as much as budget.
Yeah, absolutely. And the budget date is out, the 23rd of July. That's what we're keeping an eye on. So 2 weeks out, we are in fact going to see the finance minister present the final budget for the upcoming year. Of course, there are plenty of things to keep an eye on out there. Fiscal deficit, along with what potential taxation changes that we can expect. Well, we also have Tamanna now here with us. Tamanna, what are we watching out for?
Yeah, so this is going to be a big one for the simple reason that if you look at three statements, one that Prime Minister Modi made when he took on his third term, Finance Minister has made in Parliament, and the President has made during the President's address. They've all referred to historical steps that will be taken. In fact, Draupadi Murmu, the President, has talked specifically about historical steps that will be taken in this budget. So first, just some context setting. It's the first budget one of 3.0 of the Modi government. Historical 7th consecutive budget for Nirmala Sitharaman. No other finance minister in the history of India has done 7 budgets in a row. So that's a big one. Also, remember, since it's the first budget of this term, it's the time when you set the context, right?
Right.
So a lot of it will be what you will do to get to Viksit Bharat. There will be a lot of, big moves that they'd want to start right off the bat.
Absolutely.
And set the roadmap for the next 5 years. Now, having said that, what is the street watching for? One is that how does the finance minister and the government spend that 2.1 lakh crore bonanza that they got from the Reserve Bank of India before the election result? So what are you going to do with it? Does your fiscal deficit target now come down? Remember, it was 5.1% in the interim budget. There's an ICRA report which is saying it could be even 4.9 to 5%. That would be a big upside for the market because then, you've decided to use that money prudently to reduce your fiscal deficit instead of financial profligacy or a lot of spending. There could be quite a bit of focus on improving consumption. The question is how? Do you cut taxes? Do you increase the basic tax slab? Do you sweeten the new tax regime further? All of those things will be seen. If there is space for them. I think also what happens with the PM Kisan Nidhi Samman, because that is also a promise which was made, remember, in the election rallies, that what is given right now to farmers as 6,000 rupees a quarter will be increased to 9,000 rupees. That's a promise that was made by the Prime Minister in election rallies. This could be the time when it is rolled out. It would be a boost for rural consumption. I reckon, Agam, even the PLI schemes, are you expanding them? Because you want to work on jobs, you want to work on manufacturing. Remember, this is also the budget where you're going to be sending out a message after a mandate which was not quite what the BJP wanted.
Absolutely, yes.
It was not a, photo finish, perfect kind of a mandate.
Yeah.
Coming to that point, there are reports that the TDP, their biggest ally, wants a huge pound of flesh and an allocation for Andhra Pradesh.
Right.
It could be as much as 100,000 crores, is what Bloomberg reported actually last week.
Yeah.
Does that happen? That would be a big signal that are you now giving in to allies or are you standing firm?
Right. Back in April, the Prime Minister had indicated that once the elections are out of the way, you're going to have big bang decisions immediately after the outcome of the elections. We've had a handful of very large cabinet decisions which are already made that have come through. And you made a note and mention of what potentially could pan out for Andhra Pradesh and what the allies could potentially need. But in general, you wouldn't be expecting too much of a deviation in terms of the big bang, changes that they in fact do want to bring about.
No, more of the same.
Yeah.
Directionally, more of the same. Because look at from the first day of term 3, the message has been continuity and stability.
Right.
You have the same ministers, the same cabinet.
Yeah, absolutely.
So more of the same will definitely be there. So which is why I'm saying things like PLI scheme, it's worked before, it could be expanded. Things like that could come in. I would be very keen to watch the capex figure as well.
Yes.
Does the finance minister stick to it? Does she increase it significantly?
Right.
And all of your sectors, your rail, defense, etc., all of them will be in focus ahead of the
What
budget.
do you think the markets should be nervous about? Would it be about taxation?
I think the ever increasing nervousness will be about whether there will be some kind of diktat on F&O trading.
Right.
That is definitely on the back of the mind.
Yes.
I think we are seeing all the smoke signals on it from everything that the SEBI chief is saying. No one in government or any of these institutions seems very excited about the kind of volumes we're seeing in derivatives.
Right.
And I reckon you would know the buzz on that, Agam, that there must be some fear right now about whether there will be some policy direction. I think from the market's point of view, anything on taxation would be the big downside more than anything else.
Yeah. Well, SEBI's already brought out some changes and it has had, or rather it should have some impact on broking costs as far as F&O is concerned, but we're going to have to wait and watch.
Yeah, but do you do something to dissuade the retail investor from betting so heavily on derivatives is my question. Do you see some kind of a sign there?
Yes, absolutely. Well, that's one of those big factors that we are going to keep an eye on. But Tamanna, thank you so much for taking us through what we can in fact expect from the budget and all the factors that we can keep an eye on. But on that note, we slip into a short break, and on the other side, you're back with me on the futures and options space and how things could potentially pan out. Back in just a bit. Welcome back. This is India Market Open. We are now taking a look at how things have fared as far as the futures and options segment is concerned last Friday. It was a day where we actually began on a weaker note, but eventually we saw the Nifty recover and close marginally in the green, but that wasn't the case when it comes to the Bank Nifty. But as far as the Nifty is concerned, we are looking at unwinding. It was a flattish day of trade, but we did manage to close above the mark of 24,300, even as we saw the futures decline, or rather see a decline in its open interest by around 2.5%. The Bank Nifty, on the other hand, taking a step back nearly by as much as 0.9%, and we have now lost out on the 53,000 mark, and again unwinding of nearly 7% there as well. But as we move into a new week, what are the positions telling us when it comes to the options market? So on the lower end, of course, we continue to see strengthening of the 24,000 put level. That's where we've seen increase in open interest. But along with that, we're also starting to see a little bit more writing around higher levels, around 24,100 and 24,200. On the higher end, what we're also seeing is on a relative basis, there is not as much open interest in the 24,500 call. This also indicates just ever so slightly that perhaps traders at the moment are a little bit more bullish as compared to bearish. Now, let's move on and talk about stocks. We did see longs in UBL, Divi's Laboratories. HDFC Bank, on the other hand, took a big knock on account of its quarterly updates coming through. And besides that, we're also keeping an eye on stocks which are unwinding. TVS Motor Company, Gujarat Gas, Ambuja Cement, along with emphasis on Hindustan Copper, all of them advancing, even as we see a decline in open interest. So short covers there as well. But on that note, let's bring in an expert to see what he makes of these markets. Well, we have Milan Vaishnav of Gemstone Equity who's joining us on the show. Milan, good morning. Thank you so much for joining in. Let's start, as usual, with your view on the Nifty.
Hi, Adam. Good morning to all of you. I see multiple things going on with the Nifty right now. We have seen the previous week that was trending much in line with the expectations. But I am more worried about the way we have deviated from the mean. If I take a look on the weekly charts for next couple of weeks, I see that we are trading above almost 1,600 points from the nearest 20-week moving average, which is the fastest and the nearest one. And if we talk about 50-week moving average, we are almost 2,800 plus point away from it. So what I'm little uncomfortable with the thing is that even if we slightly revert to the mean, then we are in for some good, although not that big, but sizable consolidation or retracement from the current levels. That is one thing I'm looking at. But if I speak from the very short-term perspective for, say, next couple of days or maximum a week, I've seen two things happening. One is that 24,000 continues to have the maximum put Y, and that is not getting, that is not going away. So, it makes a good case for 24,000 acting as a major near-term support, important near-term support, I will call it. But on the other side, on the higher side, 24,500 continues to have a maximum accumulation of the call Y, which is followed by 24,800. So what I feel that that from the immediate short-term perspective, traders are neutral to mildly bullish. And 24,000 may continue to hold its support at least for next couple of days. That's what I believe going ahead from here. But yes, by and large, there are signs of some minor fatigue at higher levels and some consolidation from the from the current levels, and a bit higher levels cannot be ruled out going ahead from here.
Right. So Milan, based on that, you're still playing a short strangle at the moment on the Nifty?
Yes, I by and large expect that even if we continue to post incremental gains, we are not going past 24,800 levels. So I would create a short strangle for 18th July expiry. I would sell 24,000 call and 24,000 put and would collect a premium of around 98 rupees. And that would translate into some expected yield of 3.5 to 3.7% if Nifty continues to stay in this range. And as a part of risk management, we would have to exit this position if 24,000 ends up getting violated on the downside or Nifty moves past 24,800.
Okay, so that's the short triangle on the Nifty. Milan, just a follow-up question. Do you think that given the premiums, it would make sense to add wings to this particular strategy, or you'd want to avoid and just stay with, the breach on either levels?
See, the reason that I've gone to the next week is the thing that we are sitting once again on very, very low wicks. And because of that, there are virtually no premiums if we sell the same pair for this week expiring. So even for the next week, we are hardly getting 98 points. So if we add wings to it and make a condor out of this, we would be extremely compromising on the potential yield. So rather than, I would stick to a very disciplined exit rule and would stay with the strangle and make a very disciplined exit if either of the if either of the levels get violated.
Okay, fair enough, Milan. But from there on, we move on. Of course, we are looking at the earnings to start through. I'm not exactly entirely certain if you have a call on TCS based on the earnings, but what is your view here?
No, I am a hardcore classical technical guy. So obviously the call is not based on the fundamentals, but this is purely a technical formation that I'm looking at. And importantly, Nifty IT index as a whole is showing a very strong improvement in its relative momentum against the broader market. So based on that, I have a directional view on TCS. I would issue a call spread here with by buying 4,000 call and selling 4,300 call. The max premium that we would pay would be around 13,668. That is the maximum loss that one can ever incur on this trade, whereas the maximum profit potential is 38,800 plus. Now, we can even minimize this loss figure. Maximum loss figure can still be capped at lower levels if we keep a protective stop on TCS spot levels slipping below 3850.
Okay, there you have it. That's a bull call spread on TCS. And this is, of course, played over the course of the entire month. Well, on that note, Milan, taking a moment to thank you for joining us and taking us through your views on the markets and, of course, giving us a couple of option structures to play around with. And with that, it's back to you all.
All right, thanks for that. Thanks for that, Agam. So those are some key option strategies to watch out for. Let's now focus on what to do if you want to take maybe derivative trades or otherwise. Kush Boda, founder of kushboda.com, Soni Patnaik, AVP at JM Financial Services, both on technical and the derivatives, Niraj Shah, head of equity research, and Latin Manarlal on the fundamentals. All three of you, thanks so much for joining in, and good morning to all of you. Soni, I'll start off with you first, and would love to know if you're taking any trade on the indices at this point of time, or are you restricted to stocks?
Good morning, Niraj. Thank you for having me on the show. So I think, Nifty and Bank Nifty both can be seen consolidating in a range. So as of now, the range play is working out well. On the lower end, you can see 24,150, 200. That range is acting as a good support. On the higher end, 24,400, 450 is acting as a resistance. So the range play can be whenever it approaches the lower end of the range, one can buy, and it approaches the higher end of the range, one can book profits over there. So it's the play that's going on for now. Not much to do beyond these levels, because only a break beyond of these levels can determine further trend. My advice would be to stick to stock specific approach, because wherever you see good breakouts with good long filter positions, that is going to act far better than the indices play as of now. And for the indices, let's just stick to the range. It's better to stick to the stock specific strategy for now.
All right, let me get a comment from Kush as well. Good morning, Kush. Let's start actually with your top picks for today.
Hi, Tamanna. Very good morning. Well, a couple of stocks on my radar, incidentally, both from the cash segment. ME Organics, this stock actually made a very smart recovery. It's given a close above the resistance level. So, we've got this on our radar. From a near-term perspective, 1460, 1485 are the targets that we're looking at. 1395 is where you place a stop loss. The other stock, very similar structure as ME Organics, which is Welspun Corp. Here too, we've seen a very sharp recovery. The volumes have also seen a pickup in the last 8-10 sessions. And on the days when the stock ended green, the volumes have shot up, suggesting that there is fair bit of accumulation going on. This one could turn out to be a very profitable positional bet also. But from a near-term perspective, if you want to enter, then 630, 650 are the levels to look at. 605 is where you place your stop loss.
What about on the Nifty and the Bank Nifty, Kush, after last week's battering, especially on the Bank Nifty?
Well, Nifty, I kind of agree with Sony here that, it's in a bit of a range. 24,000, 24,200 have had a very strong put base, don't seem to be budging. So if you get it anywhere closer to those levels, perhaps, you can enter and play the range. Bank Nifty, I have a slightly bullish view now. Or let me just put it up this way that, if you've got any short, you should perhaps go out and cover them. Because even on Friday, if you see, or the last couple of days, it's just the HDFC Bank move that's dragged the index lower. Now, 50 to 200 is a good support zone if that is respected. Perhaps 51,800 as your stop loss, and you could even consider a long position on Bank Nifty. I wouldn't jump into this trade at the opening. In the initial half an hour, if this level is sustained 50 to 200, then perhaps you should cover your shorts, even consider, a long position on Bank Nifty.
Yeah. Sony, let's start with sector rotation that the market has been witnessing. Actually, I'll talk to Nirav about that. But in your opinion, the three sectors that have stood out for me at least has been railways that have seen a return of buying interest. Defense, of course, there's been no return there. It's just been on the up since the start of this year. And even pharma and IT has been seeing some buying. Anything that looks constructive here? Do you want to take us through your picks otherwise for the week?
Yeah, definitely. I think I would agree with you that railway has been giving you good momentum. Even defense space, you can see, BEL, HAL, they are also acting out pretty well. But specific approach from the railway sector, IRCTC is a stock which has fairly underperformed to its peers, and it's looking like it's just coming above that breakout as of now. So IRCTC looks like a good buy from current levels and on slight dip towards 1020. That can be the range one where you can initiate longs, keep a stop loss of 1000 and a target of 1060. So it's as per the risk reward ratio, the 1060 looks quite approachable, but if it's able to sustain above 1050, 1060 level, you can see a higher extended target towards 1080 plus levels. I think this stock is looking quite attractive at current levels, and the entire sector can perform, but this is something that this stock has underperformed, so it has a high fair chance of, the way it has been adding up long better positions on Friday. You can see it performing from current levels.
Let me get Nirav in as well. Nirav, very good morning to you. And, we've been talking for the first half hour of the show about how business updates, result season, budget is going to dominate really the rest of the week. What is your sense on the first cut of business updates that you've seen?
Yeah, good morning and thank you for having me on your show. Starting off with the business updates, I think not a very pleasant picture. It's been a kind of a mixed bag. To start off with the auto sector, where we had the monthly updates, there has been some slowdown, and there are concerns of inventory pile up at the retail level. But the Federation of Automobile Dealers has attributed this to the heat wave and the postponement in the monsoons. So I think delayed monsoons have impacted the rural sales. And now with the monsoons picking up momentum, I think we can expect some improvement in the sales. As far as company specific is concerned, we've seen very, very divergent kind of trends emerging. Starting off with Titan, I think it was a muted quarter as far as Titan is concerned, and they have indicated that the higher gold prices, which have been sustaining upwards, and the lower number of wedding days during this previous season has led to a very muted sentiment as far as the gold jewelry sales are concerned. Now, if one were to compare this with a smaller player like Kalyan Jewellers, I think Kalyan Jewellers has given a very confident outlook as far as the sales are concerned. And going forward, they have a plan to set up about 130 showrooms during the year. So I think very divergent trends coming over there. As far as the FMCG sector is concerned, we have Marico, where the growth seems to have been priced in completely. And as far as Dabur is concerned, it's given a very, very confident outlook going forward. As far as banks...
Nirav, let's try and talk about these individually. Otherwise, viewers will get completely lost. So thanks for bringing this, but that's all-encompassing an answer. We'll come to each of these individually. So before we get to Nirav's view and the view from Kush as well on some of these per se, let me first get in my colleague Mahima, who joins in with the details of some of these updates first. Mahima, good morning.
Good morning, Niraj. So I'll start with business update of Marico, where the international business has delivered a double-digit constant currency growth for Marico. Consolidated revenue have grown in high single digits, and consolidated revenue is expected to grow in a trend upwards in FY25 is what the company is saying. Now, in terms of gross margin, the gross margin is expected to expand YOY basis, and operating profits are expected to grow slightly ahead of revenues for Marico. The next one is Titan, where Titan jewelry business grew by 9%. However, Carrot Lane has experienced a growth of 18% YOY. Watch and wearables did see a growth of almost 15%, and eye care business grew by 3%, which in Q4 did witness some kind of slowdown. In terms of emerging business, it grew around 4% YOY, and TCL business grew around 9% YOY. In terms of Dabur India, well, sequentially, there has been improvement in terms of demand trends, and rural growth is picking up for Dabur India, and they expect improvement to accelerate in the coming months. The consolidated revenue is expected to register mid to high single digit growth for Dabur, and India business is expected to record mid single digit volume growth. Lastly, we also have Adani Wilmar, where it saw volume growth of around 13% YOY, and the branded export volumes grew by 36% YOY, and food and FMCG business volume growth grew by 23% after normalization. So for all of these FMCG companies, on the back of business updates, what we can conclude is that the monsoon is picking up, and the rural green shoots are showing some good signs in Q1 FY25.
Oh, those are some FMCG names that have come out with those numbers. Now, thanks for that, Mahima. Nirav Asher, let's break these down one by one, right? Staples or FMCG, Dabur, Adani Wilmar, and Marico. All of them have said that margins or gross margins will improve in the quarters to come. The commentary or the performance from at least Marico in quarter one also doesn't seem to be all that wobbly, or did you find it otherwise? And if so, do you like any of these three names from an investment perspective?
Yeah, so starting off with Marico, I think a lot of growth is already priced in, but because if you look at the valuations, it's already trading at a P multiple on a historical basis of more than 70 times. So I think everything all possible upsides have been captured into the price. As far as the Dabur is concerned, then I think it's a slightly different picture, because some of their portfolio segments have been doing very well. For example, mosquito repellents, oral healthcare division, the digestive division, all these have been doing quite well. So I think the outlook as far as Dabur is concerned, it looks far more encouraging. And as far as Titan is concerned, I think it's been a very, very muted kind of a quarter. So I think there we could see some pressure on the stock. As far as Adani Wilmar is concerned, I think it continues to be a very, very strong growth story. So we remain positive over there.
All right, stay on with us. We're just getting a quick update on the downpour that you're seeing in Mumbai today, and not just Mumbai. This also means that your overall rainfall deficit has come down significantly. So we're speaking with Mr. S.G. Kamble. He's a scientist and head of RMC at the Mumbai IMD. Mr. Kamble, very good morning to you, and thank you for speaking with us here at NDTV Profit. First, to just get a sense of what has been happening in Mumbai, where the rains have been incessant since, I think, late last night. Do you expect this level of rainfall to continue through the day and over the next 24 to 48 hours?
Actually, since last midnight, 12:30, rainfall has, there was an intense spell of rainfall. And till morning 5:30, we have almost recorded 261 millimeter of rain in 6 to 7 hours. And now the intensity of rainfall is likely to decrease today. and this will be in the moderate of heavy rainfall from today and tomorrow.
Kamle, just moving away from the local rainfall to what's happening, I understand that up until yesterday we were in a deficit, monsoon deficit. With the recent rainfall that we've seen over the last few days, has India now moved into a monsoon surplus? And there are only 6 states, I believe, that remain in a deficit now.
If you see the rainfall quantity has occurred today, with considering that Mumbai is at the average now. We were having the deficit of 30% at Santa Cruz, but today we have got 267 and that deficit is almost over.
You said for pan-India is over, is that correct, Kamle?
If you talk about pan-India, the monsoon has covered on the 2nd July itself, 4 to 5 days in advance. So pan-India also, we are at par with the average monsoon as on today.
Okay.
Yeah. Okay. Thanks a lot, Mr. Kamle, for joining in today and giving us your thoughts on this. Okay, what we need to do is slip into a quick break on some positive news that the monsoon deficits might be getting recovered. Remember, SkyMet and IMD had both said that between July and August, we will recover the deficit that we had in June, just that it's probably happening a bit earlier than what was anticipated, which is great news. We'll be right back with the pre-open session. Stay tuned.
Welcome back. You're watching India Market Open. All right, a minute and a half left for the pre-open session. Gift Nifty is looking at a completely flat start as of now. But what are the stocks that you need to watch out for? Let me quickly take Soni Patnaik's picks before we get into the pre-open session. Yes, Soni?
So the first would be an RCTC as we discussed. It looks quite positive from current levels. One can buy on small dips towards 1020, keep a stop loss of 1000. and a target of 1060 can be seen. Any sustenance above 1060, it can head towards 1080 plus levels as well. The second pick would be from the chemical fertilizer basket. It is Navin Fluorine, which has also been adding a long built position on a week-on-week basis. One can buy at current levels, and on any small dip towards 3600 can be the range to initiate the longs. Keep a stop loss of 35.88, 35.80, which is acting as a very good support as of now, and higher targets of 3800, 3850 can be seen.
Well, those are a few buy calls coming. Kush, have we taken your buy calls? You like anything to trade on the long or short side today?
Yes, Samina, we've discussed ME Organics and also Wellspun Corp.
Nothing in defense, I see.
How could I?
How could you not, you mean?
Well, I mean, some of these names have actually run up quite a lot. We've discussed this time and again. Perhaps if you're looking for a trade, then a BEL is something that I'd put on my radar.
BEL has got a buy call across the board. Technical and fundamental analysts alike seem to be constructive on this one. You know, Tamanna, you missed the party last week. You had
on defense.
On defense. If you look at the way they've done, Garden Reach, I think, is up about 100% in the last 3 to 4 weeks.
Wow.
Cochin Shipyard has done the same. BEL is the only one that's underperformed. It's very aggressive case. Of course, it's still up 25%.
Yeah, in relative terms. In relative terms, wow.
So hence it's showed up on the buy list of a number of analysts. But that's pre-open. No surprises. It's looking quiet. Largely on expected lines. I don't know whether the heavy monsoon in Mumbai ever has an impact on traders coming into work and
it does. It probably does. I'm seeing horror stories online of people getting stuck and then looted because then you can't really go from trains. It's going to be a tough one. But just to look at what is working this morning in Bajaj Auto on the radar, and like we mentioned in our opening setup as well, at least 3 notes out on Bajaj Auto after their Friday launch of a CNG product. That stock at 9732 in the pre-open session. Just wondering, Kush, what you make of a Bajaj Auto on the charts?
Nothing too exciting, really. There has been a bump up, but as you would expect, ahead of, a big launch like that, the stock's close to the 20-day moving average. Perhaps, it could move another, let's say about, 100, 150 odd points. But beyond that, I think there could be some resistance coming in. So I wouldn't go fresh long on Bajaj Auto. If I've got one at a lower level, then I would keep the closing price of Friday as my trailing stop loss and, ride the wave.
About you, Auto Pack, let's talk about M&M as well. M&M doing decently this morning in the first few minutes at least. M&M and Bajaj Auto. Nirav?
Yeah. As far as Bajaj Auto is concerned, I think we remain extremely positive on Bajaj Auto. It's got very strong cash flows. Their exports are also on the recovery mode. The domestic operations are doing quite well. The two-wheeler space is doing quite well. And recently they've launched the CNG motorcycle, and that is also likely to garner in a very positive response. So from our perspective, I think Bajaj Auto looks quite exciting. On the other side, Hero MotoCorp has been under pressure because Bajaj Auto now has a first mover advantage in the CNG space. So I think we expect Hero MotoCorp to come under a bit of pressure. And Mahindra continues to look quite good now with the prospects of monsoon improving substantially. I think the tractor division is also likely to pick up pace. And of course, the SUV cycle has been doing quite well. The SUV space is doing quite well. So we continue to like M&M.
Okay. The first couple of minutes, so maybe not indicated, but I wonder if Titan is already showing some downticks. So that's one name to certainly watch out for in addition to Kalyan. Titan is not, interestingly. Whether Kalyan is showing an uptick is the other question, and should come up on your screen next. Kalyan Jewellers. No, not really. Both of them marginally in the green, if you will. Remember the Titan update, not the most optimistic. Sony, coming on Titan, maybe a Kalyan Jewellers, if you have thoughts on either of them from a trade perspective.
Niraj, Titan 3300 is a good support. Even today, we can see that it is opening above it. So as long as that level gets defended, the stock can remain a buy. It will be considered as a good option chain breakout, and the stock can head towards 3380, 3400 levels. So I think this stock certainly just needs to, just sustain and defend the levels of 3300 support in today's opening. So I think that is going to be the level to watch out for. In that case, out of both these stocks, definitely Titan would be the better pick.
And Kush, from stocks that did really well last week, Kush, some of the pharma names stood out, especially on Friday. We were marking them in the closing show, but a Loras or a Shri Pushkar Chemical, Divi's, so chemical and pharma. This pack, any of these stocks stand out for you? They've done really well in the last 2 days.
Sure. In fact, Niraj, I'll add a couple of names to those. This list. We've discussed. It was Granules and Glenmark. Both of these also contributed. Still got them on my radar. A Loras, a Metropolis, a Dr. Lal Path. These stocks have come out of a long slumber. So we might see a continued up move on these, but these are going to be very sharp. So I would rather play a Glenmark or a Granules for a steady up move. Loras, Metropolis, if you've gotten these in your portfolio, by all means, continue to hold them, but have a strict trading stop loss. As I said, the moves are very sharp on these. For a slightly more steady move, consider Granules and Glenmark.
Kush, Sony, very quickly, I know banks may potentially be on the sell side in today's day of trade. But, let's not forget the last 5 weeks has seen banks actually do quite well in trade. Do you feel like if they do get a flat start, any of those banks could make good buying opportunities? HDFC went on with a 5% cut on Friday. Any of the PSU banks and ICICI Bank, which is a street favorite these days, would you consider a long trade here? Any of the banking names?
Samina, I think Bank Nifty, as long as the 52,000 support is defended on a closing basis, the index can consolidate and test the higher end of the consolidation range, which is towards 52,800, 53,000. So that range definitely can get tested. It is quite important. If we talk about stock specific in the sector, in the private banks, you would look at Axis Bank, which is looking quite positive. It has seen good rollovers on the longer side for July series. It has also seen a fresh breakout in July series. So I think the stock can test higher levels of 1320, 1340 for the series. So this stock is definitely a good watch to keep on your radar, with the support stop loss of 1240, 1245 can be seen. I think this is one of the stocks which still has its space to left and could also definitely contribute Bank Nifty in this consolidation phase.
Ahead of budget, would you add positions to railways, fertilizers? I'm going to add defense because it has been a theme for the last few weeks or months now. Any of these three sectors could be budget trades from now until the 23rd of July?
Not necessarily till the budget only. I think we'd like to carry the positions as far as these three sectors are concerned. That is namely the railways, defense and the power sector. I think these three sectors continue to remain our favorites. And we have identified stocks at a very early level in all these sectors, and we continue to hold these positions. And I think it would really have nothing much to do with the budget. We will continue to hold these positions.
Trades, Mazagon Dock, Cochin Shipyard having a quiet start in early trades. Let's look at Bandhan Bank, Bank of Baroda. Those are some of the updates that came in. Signature Global on back of numbers. Bandhan is down 1%. It's in the F&O band, so you may not see a very big correction on that. Bank of Baroda fundraising plans. Jeffries note the stock is trading with a 2% cut in pre-open. Another space that we will be tracking closely in the session is going to be IT. Remember, TCS kickstarts the earnings season on Wednesday, followed by HCL Tech. Tech is looking good on expectations of, on increased expectations rather for rate cut in September. Tech could be on the buy side today. But as always, it's 9:05 and it's time for our brokerage link. Harsh is standing by with what brokerages have to say. Harsh, what do you have on the radar today? What is the stock of the morning with reference or regard to brokerages?
Well, one very interesting note, Samina. Sorry for that. And, we have Equirus, which has initiated coverage on Stylum. Now, Stylum has been in focus, couple of initiating coverage notes, and again, the buy or rather the recommendation is extremely positive. 27% upside from here is what Equirus sees. What they're suggesting is that the laminate market in India is of course going to witness strong growth going forward given the real estate boom. So that will be one fillip which they're looking out for. The other piece that they're really looking out also for is the export opportunity, where Stylum, 2/3 of its revenues come from exports, and the growth in exports will continue to be very strong according to Equirus. And that is what will drive the earnings momentum for Stylum as well as top line growth for them. The domestic market, of course, growing and scaling up very well, and Stylum having that opportunity to go pan-India will also be something which the brokerage as well as the markets are really looking out for. Is what they are suggesting. Debt-free balance sheet, good return ratios, so all of that, of course, as key positives going forward. They're expecting strong operational performance from FY24 to 27. They've given it a target price of 2,489. This is based on 25 times 1 year forward valuation, so valuations also not looking steeply expensive. And this is, of course, September 25 target price which they've given of 2,489, 27% upside. Also risks, mind you, always good to highlight those. First is the Red Sea crisis. How that continues to play out will be something which they have their eyes out on. Possible downside risk there. Lack of domestic brand awareness, especially in this space. Foreign exchange fluctuations from an export market perspective. More competition in lamination from in the export market as well could play spoil spot, and a higher correlation to the real estate growth. If that were to taper, that may be a risk as well.
And one other stock, thank you for that, Harsh. That's a stock that we're watching out for. Ready in pre-open trade, Stylum is up about 4 to 5% as we see it. You want to come in on Stylum, Kush? What is your reading of that? And also Dr. Reddy's. I think there's been an aggressive downgrade on the stock on the weekend. I'm guessing it could be on the sell side. Both those trades, one on the long and one on the short side.
Well, Stylum clearly has already seen some action. If you see the last 2 weeks, strong volumes up quite sharply, all the way from about 1650 or to 2000. The opening is also above these levels. So I think from the near-term perspective, a trade on this is already done. If you've got a position, hold on with a trailing stop loss of 2000, ride the wave, could actually extend up until 2125, 2175 kind of levels. But the risk-reward ratio will not be favorable for a fresh entry on this one. So ride the wave, fresh entry, perhaps on dips closer to 2000 levels, if you get it again. Dr. Reddy's has been on a good run. If you, if you do see it dipping towards, let's say, 64.50 kind of mark, does make it, an interesting buy. So hold on, see how the stock reacts. Closer to 64.50, perhaps a good entry point on Dr. Reddy's.
Okay, just wanted to get a sense on Adani Wilmar. Adani Wilmar buzzing in trade, at least in the pre-open session. So is Marico. Some of it perhaps in those business updates. How are they looking on the chart, Sony? Any of those consumption stories that you're finding interesting?
Here, I think Marico definitely is looking quite strong. It has seen a good support of 600 getting held, and the stock is just bouncing from those levels. So I think it's an important support for a short-term bounce. Keeping a stop loss of 600, one can even enter Marico for a target of 650, 655 can be seen.
Okay. 3 minutes left, and we've seen what some of these individual movers have done. Man Industries is up about 9% in trade on a result, 8% because of an order win. So watch out for that. Ethos is down about 10%. A couple of stocks stand out there, so keep an eye out for those. Nirav, one quick word. Anything on a pipe company like Man, 8% higher because of an 1850 crore pipe order?
Yeah, the order book continues to swell, and they've been receiving a lot of orders, particularly on the export side. And I think they've got their facility at Anjar in Gujarat, and that caters to the export markets. The valuations are looking pretty attractive at the moment, so one can definitely expect this stock to be a multi-bagger going forward.
Some some counters which are buzzing. Your public sector companies, defense, all of that buzzing this morning. I mean, you could put it down to some pre-budget action as well coming in. But an NLC also standing out. A BEL, Samina was talking about it, up 1.5%. Nirav, it's the same old story, but it's one that doesn't seem to be ending. If you look at RVNL also this morning, at least in the pre-open session, looking interesting. So in that pre-budget play, what are the kind of stocks that you would be looking at?
So we'll be looking at stocks like RVNL, IRCON. I think the order book has been going up. They continue to win strong orders. I think last count we had RVNL order book close to 90,000 crores, more than that. And I think going forward, we expect the annual revenues to start moving up, and the operating leverage is likely to kick in. So once the operating leverage comes into the picture, we'll have a better quality of margins. The margin trajectory will improve, and thus we are seeing the valuations beginning to catch up over there. So the same thing is happening with IRCON. Of course, IRCON has an order book of close to 30,000 crores. So I think these are doing quite well. As far as the shipbuilding space is concerned, we have Cochin Shipyard, where we have the international dry dock facility, international ship repair facility, which is going to be inaugurated in the next month. So I think these are very, very important triggers for these stocks.
Got it. Okay, gentlemen, and of course, Sony, stay on. We don't have time for getting the top stock of the morning, but we'll do that after the open maybe from both Kush as well as Sony. But here come the first rates this Monday morning after the budget date has been announced. So whether that excitement also shows on the screen remains to be seen, because Asia is down and our markets start off flat. The banks should come up on your screen because the updates haven't been that strong. The bank Nifty looks wobbly. Is energy and IT making up for it? Maybe just Nifty IT, which was flat on Friday, should come up on your screen next. Energy is up 0.25%. Maybe ONGC, maybe Reliance is up. IT is doing okay. Okay, Tamanna will mark the mid caps and the small caps. Let me start with the heat map on the large caps very quickly and show you what's moving and what's not. So Tata Motors reacts to what was a decent update because the expectations are not very high, but ONGC up in the green. We're seeing some bit of a defensive bent with HUL, Cipla, Apollo Hospitals, HDFC Life, Tata Consumer, Wipro. It is clearly a defensive bent. Now, what is not doing well? Titan, 3% lower on that quarterly update, and no surprise there that the stock is being punished because the numbers are not looking great, and even after the corrective move from the highs, Titan is not a cheap stock. Shriram Finance down, the twins, ICICI, HDFC Bank down, there is weakness in Asian Paints, Tata Steel, the street probably not too enthused with these updates, IndusInd Bank not too enthused with those updates as well. So that's the long and short of it. Seemingly, Titan is taking it on the chin. Some of the other banks, much like Friday, are correcting. HDFC Bank now is probably down 7 or 8% from those highs that it clocked in when the MSCI rebalance conversation came in. And on the flip side, it's Tata Motors, HUL and ONGC which are taking the cake. But even Stevens on the advanced decline.
Yeah, it's a flat kind of a day. I think business updates is what is going to dominate, and results is what is going to dominate the conversation. Remember, Q1 also typically not the strongest quarter for a lot of sectors, so that will come into play. But meanwhile, let's look at how the mid-cap and small-cap indices are doing. Let's start off with that whether the broader markets are having a better day, and they absolutely are. Mid and small-cap stocks are going to be in focus all through the week. Remember that as well. Small-cap 250 up nearly 1%, and the reason is that as you get into the budget plus result season, these are going to be in focus and could come back. Now, specific stocks that we're tracking this morning or have been interesting, Metro Brands is one of them, was buzzing in trade in the pre-open session. Let's take a look at how it's doing right now as well. So up about 8%. No specific story over there really, but absolutely buzzing in trade this morning. Adani, Wilmar, Marico, Dabur, all of them on the back of business updates. All of those business updates looking positive. Remember, rural is going to be the story. You saw that in the Nifty 50, also HUL up there in the top row. And Adani, Wilmar up nearly 3%, Marico nearly 3.5-4%, and Dabur India 2%. All of them are talking about seeing an uptick in rural recovery and expansion in gross margins as well. So that is playing out. RVNL continues the pre-budget buzz, I suppose, which we saw most of last week with a host of banking stocks. Look at that stock this morning, nearly 9% up on RVNL. Just want to pull up some of the defense plays as well. Because defense, PSUs, railways, that theme sort of continuing today. So let's look at what NLC is doing. Let's look at a BEL. Let's look at some of those counters and what they're doing today. NLC, of course, has also bagged a coal block in Odisha. So that's about 1.5% up. Man Industries is the other one. And Niraj mentioned it pre-open as well. I want to see how it's doing after the first tick. About 7% up. It's an 1850 crore order win. Sizable one when compared to the order book of this company. Bandhan Bank, not so positive in terms of the uncertainty in management, and that's something the street generally doesn't like. So down about 1.5% today. The last one I'll round off with is Signature Global, also on business updates, which the street seems to have liked relatively. So 3% up. Those are some of the stocks that are buzzing this morning, but many, many more I'm sure on your radar, Samina.
I think the good news, Tamanna, is that the broader markets are doing slightly better than the benchmark. So I think we'll take a little bit of hope from the fact that there is some buying on the mid and the small cap index. There you go, mid cap is up 0.5%. It's actually not a small difference. And the gap between the small cap and the index itself is also significant. The small cap index sees a gain of 0.7% in trade. Mid cap index up 0.5%. Micro cap index also trading with a positive bias. The only pressure point on the index, though, is the large cap space that trades slightly weaker. Tamanna mentioned how RVNL was your top gainer, but it's not just RVNL from the rail pack. The whole sector is doing exceptionally well today. So if you pick up any of those railway stocks, IRFC is up 5.5%, so that looks good. You've got a whole bunch of other IRCTC, IRFC, RVNL. That whole pack is looking good. HBL Power and Systems, that's the other space you want to quickly take a check on. The stock is up 6% as we see it. In the defense pack, we've mentioned a few names, but the buying will emerge, if not just yet. Stocks like BEL, HAL, there you go. Guardian Age continues to its upward rally, trades the gain of 3%. You will have HAL up about 1.5%. BDL, Mazgaon Docks are some of the other ones. You mentioned Bandhan Bank that is seeing weakness. The other one from the banking pack that's not looking good is Bank of Baroda. Metro Brand is up 12%. Tamanna mentioned it. We don't know what's going on here, but that stock is up significantly in trade. It's your biggest gainer in the Nifty 500, trading with a rally of 12% as we see it. Apart from that, on the losing side, Torrent Power is looking weak. Honasa Consumer is down 2%. Tech is not having a great day either. KEI Industries is down about 1.5% as well. And across real estate stocks like Brigade are also seeing some weakness. On the upside, there are a whole bunch of stocks that are reacting to the news flow that these stocks have seen. So I'll just quickly highlight a few that hasn't been mentioned already. Great Eastern Shipping is up 8%. Swan Energy is up 6%. BML is up 4.5%. V-Guard is up 4%. 197 is up 3.5%. Marico, Dabur are also seeing some movement in trade. So all in all, it's not a bad start. Sony, you want to quickly take us through what you're making of opening and if you've spotted an opportunity for the day?
So Samina, it's the same story. I think Nifty is still in the consolidation range, and let's just wait for the range to break. Definitely stock specifically, you're seeing a good action. So right now, auto space is something which is looking quite strong. Tata Motors for the day, 1,000, it has crossed that resistance. It's holding above it even in the opening. I think that stock can be definitely kept in radar for the day, keeping a stop loss of 995 and a target of 1,025, 1,030 can be seen.
Okay, Kush. Your opening thoughts, any stock that stands out for you, Kush?
Well, it looks a little optimistic. Bank Nifty is holding on to that 50 to 200 mark, although it's a little too early in the day. But if we do hold on, then there could be some recovery. HDFC Bank also might at least consolidate sideways. So, I'm looking at this slightly optimistically. A couple of stocks, in fact, Niraj. One of them is Tex Infra. This stock is, held up and added to gains since the opening, 7 minutes. So that's one on my radar. 151 is the target and 154 is the second target. 144 is where I would place a stop loss. HFCL also. although it's given away some of the gains from opening, but I think there is a very clear breakout that's underway here. So with the stop loss of 127, you could hold on to this one for targets of 135 and 138. So Tex Infra and HFCL are the two stocks that have caught my attention this morning.
Thanks, gentlemen. Thanks, all of you. In fact, Sony, Kush, as well as Nirav, we'll have to leave it at that.
I think to start saying gentle people.
Yeah.
Because you keep saying gentlemen and Sony.
And Two of them and Sony.
We're even Stevens now between the screen and the studio.
Okay, Sony, if you took offense to that, I'm sorry, but I'm sure you didn't. So thank you for that. But thank you for joining in today, all of you, for giving us your thoughts. But, well, strong numbers from Signature Global. And Rajat Kathuria joins in to talk about those because the pre-sales were up 255%. 255%, that's very strong. Realizations up 31%. Best ever quarterly collections up 100% as well. Rajat, there is no reason for you to be unhappy, but is there, I mean, if you had to pick up one thing in the quarter that didn't quite go well, what would that be? Let's start with that because everything else looks good.
So I'll just give a bit of a background and then try to, address this question because it's a tough one right at the start of the day. So, we are going through a phase of for a sustained demand from customers and better supply as a market than what it used to be. So that's the primary reason you will see the sales numbers growing. It's not because the demand has all of a sudden come up, which was non-existent. It's just because, we've managed to do, more supply of product, and that's why, it's picked up. So we've always maintained that housing is supply constrained by a big magnitude. And hence, for years to come, we see, an uprun in this space. So that's the reason, sales went up, collections are going well. A lot of our completions are getting completed. They are on track. But yes, if you have to really ask me the toughest thing, we are just keeping a very tight discipline on the execution side. That's something, which is the biggest key in this entire game.
Kathuria, good morning. Tamanna here. Great to speak with you today. Just wanted to understand the pace that you are expecting through the year because you've achieved more than 30% of your total pre-sales guidance of 10,000 crores in Q1. So you're ahead of the target, I presume, on a quarterly basis. Are you seeing the scorching pace continue?
So Tamanna, I'll just reiterate. See, it's a factor of what supply you put in the market. So for instance, in the first quarter, towards the last 15 days, we came up with a project by the name of Titanium SPR, which is at a very key location within Gurgaon, and it saw a phenomenal response from customers. During this year, our target is to create supply worth 16,000 crores, and hence we have given a guidance of about 10,000 odd crores of sales. If we are able to create this supply as envisaged, we believe that the sales performance will be basis the guidance we've given in the market.
Also, very quickly, this is Samina joining in as well. Rajat, those numbers look phenomenal. We also caught up with your management last week to talk about the big project that you have in Gurgaon that has been exceptional in terms of pre-sales and what you're expecting in the calendar year. What we didn't get an understanding of is, I know you've moved from affordable housing to premium housing. How much better are margins in the current setup? Cost of building has also gone up significantly, but how are your margins turning out to look?
So see, we've pivoted ourselves from affordable to a wider spectrum of mid-income homes. Our target audience is people looking to buy homes starting from about 1 crore and going up to, let's say, 4 to 5 crores. So I know it's a slightly wider spectrum, but whether you call this 4 to 5 crore segment either an upper mid segment or, early premium segment, but that's the kind of spectrum we are targeting in terms of product offering. During this year as well, we will continue to offer products across this particular price segment. Affordable housing has become challenging due to the current land values and commodity pricing, because our other fundamental or principle of business is to do housing within the city and not go very much off the city radar. And that's why it's about, 2 to 3 years that, we've really come down on affordable housing. We're still completing quite a few of these projects though, but we are not booking or kind of creating sales out of these projects. So we are a mid-income focused company working across the price points.
Mr. Kathuria, just a broader question over here, because you're looking at the trends. There was a report recently that housing prices, at least in NCR and MMR, have gone up 50% in the last 5 years. I want to understand if you are seeing that trend, how much more do you think the retail prices can go up? And is that now beginning, is there a concern that this will at some point begin to impact demand?
I would say you need to look at the price trend over a longer duration basis. So if you look at a full decade, and talking about NCR specifically, I'm not very close to the numbers on the MMR market side. But over a decade in NCR, I don't think prices have gone up more than, on an inflation adjusted basis. They've probably be around the inflationary number. It's just that the price catch up has happened more over the last 2 years. And hence, over a decade, those numbers look very normalized. As a company, Signature Global has always believed in creating volumes and hence good cash flows, operating cash flows, which will be our focus going forward as well. We are absolutely fine in case, prices just go up on an inflation near to the inflation rate and not beyond. And that's what, we'll hope for the future years.
My question, is there a concern that if prices continue to trend upwards, and you're saying most of it has come in the last 2 years, would it be a dampener for the kind of consumer enthusiasm you're seeing or the appetite you're seeing to buy houses?
See, one of the reasons why prices have gone up is because there's huge supply constraint. Over the last 10 years, the society as a whole, whether has not created enough supply and the demand has really, caught up. So that's the reason, prices corrected over the last 2 years. I don't foresee that, prices will go up in the same manner over the next 2 to 3 years. They will continue to go up because there's still supply constraint and they could at best be in late single digits to early double digits, but we don't anticipate like a 50% price hike over the next 2 years. And hence we are comfortable with our strategy of sustained supply creation and, hopeful of good absorptions in years to come.
Very lastly, I know the budget date has been announced for 23rd of July. There is a little bit of a push coming in from the housing sector as well. Any sort of expectations for your sector from the budget this year?
We feel that, government puts up initiatives and government initiatives have always been very helpful, for the sector. So we wish that, it remains one of the priority sort of sectors for the government and we'll welcome any sort of, incentives. Nothing specific I want to talk about at this forum, but, incentives is the best way to, motivate private partnership and retail participation. So, I'll leave it at that and hope that, it's good for the housing sector as a whole.
Right, fingers crossed. Rajat, good luck and congratulations. It's been a phenomenal business update. We are excited about what the earnings for Signature Global will look like. Of the top 5 gainers on the Nifty 500, 4 are from the railways pack. And with that, of course, there's Metro Brands and Great Eastern Shipping. That's not doing too badly. You've got Railway Kassingam up 12%, India Railway Finance up 9%, RailTel up 5.5%, IRCTC not doing too badly either, and Metro Brands trading with a gain of 12%. Banks seem to be on the sell side. Gautam Shah joins in now right after this break. So we'll take a break. We'll come back with the focus on market technicals and what the big trades are now. Welcome back. You're watching India Market Open. It's a flat morning on a rainy Monday morning in Mumbai. But we have with us Gautam Shah, founder of Goldilocks Premium Research, to talk to us about what his top trades are in these markets. Gautam, morning. Thank you very much for joining in. It's Samina. Budget date has been announced, July 23rd. Markets have gained significantly in the last couple of weeks. Bank Nifty was leading from the front, but there is signs of tiredness on the index. But luckily, we've seen sector rotation. Start with how you feel about the Nifty at these levels. 24,300 will 24,500 be round the corner in the near term? And also a medium-term outlook on the index. And also if you have a view on Bank Nifty, which has been the star, at least of late.
Good morning, Samina. Well, yes, I think these markets have run up quite a bit. It's been a fairy tale-ish move in these last few weeks post the June 4th verdict. And I think what I've particularly liked is the maturity with which this market has gone up. Because before the 4th of June, it was the mid caps and small caps which were actually running away. And post the 4th of June, we've actually seen a big comeback in the large caps. And that has really propelled the Nifty 2,000 points higher from where it was that particular day. Even at current levels, there are no serious signs of topping out. I think the market is still looking quite firm, at least on the large caps and on the indices front. But if you look at the mid cap and the small cap basket, I think there are some concerns. And looking at the breadth studies, I get the sense that the market could be preparing for a sort of a shakeout in the mid caps and the small caps, basically the broader markets, because I think they have run ahead of themselves and the charts are not supporting them anymore. But coming back to the Nifty, I can't give you any lofty targets because, you are at a point where you have to take it 1 week at a time. Our working target has been 24,600, and there are a lot of studies which are indicating some resistance there. So we might just take a step back closer to 24,600. But if you have to take a medium-term view and post the consolidation, expected consolidation and shakeout, if I have to give you a number, I think the next stop for the market is around 25,500. But I think please do not spend too much time on levels. I think the trajectory is important. The trajectory is up. Be prepared for a 3-4% kind of a pullback at any point of time. It's earnings season, you have the budget, and all of these global factors will also come into play. So on an overall basis, the market is firm, but sticking to the large caps from here, I think would be the key.
So then let's not waste any more time and talk about very specific stocks, right? Gautam, in your chart reading, what are those stocks that are standing out for a long trade at this stage? So if you had to go out and buy something, keeping the recent price action in mind, what are those 3 or 4 stocks that you're constructive on at current market price?
Well, we can talk about themes, and for us, it's financials. I think we've seen a fabulous rebound in financials in the last 3 weeks, and I think this is a trend which is here to stay. I think we turned very bullish on the Bank Nifty a month and a half back, and we gave a lofty target of about 60,000. So I think we believe in that target, and we believe that over the next 6 to 8 months, the Bank Nifty should get there. But don't just restrict yourself to the Bank Nifty. I mean, look at the NSE Financial Services Index, which is a good mix of banks, financials, NBFCs and insurance companies. I think that's a mega theme that is really developing. When I look at it in terms of valuation or the charts, I feel the top 2 or 3 banks, as we did an event together and we spoke about SDFC Bank being the trade for the next 6 months. That's worked well. Post the results, we've seen a bit of a disappointment, but I think the stock is ready for much bigger upside. We still maintain our targets of 2,000 and 2250, followed by ICICI and SBI that we continue to like. And in the NBFC space, I think Bajaj Finance, Chola Finance, L&T Finance, all looking very solid on the charts. Insurance, if you look at ICICI General Insurance, ICICI Pru, SDFC Life, they seem to have bottomed out as well. So financials, I think, is the key theme, followed by pharma, which we absolutely like. I think it's a fabulous setup. And whatever the market scenario, I think pharma index is going to see another 15% upside. And metals has been an old favorite. I know it's gone a little quiet in the last 3 weeks, but it's a matter of time before this sector comes back and also sees much greater upside.
Gautam, hi, good morning. Tamanna here. Just, to come back on HDFC Bank and from when we spoke to now, one would argue that it's a run-up, but the last 2 trading sessions have been a bit traumatic for some investors in HDFC Bank. Just want to get your view on HDFC, ICICI Bank, and then let's contrast it with an SBI.
Yes, Tamanna, I think traumatic is a very subjective word. I think a stock like SDFC Bank, when it goes off 40% and then it loses 7%, I think for some people it's very difficult to digest. But I think it's part and parcel of the game because SDFC Bank moved like a mid cap and small cap. And look at the way it covered up for the underperformance. And mind you, it hit lifetime highs. So I think the time has come wherein these stocks, which were in hibernation mode for 3 years, will come back. I know results was a bit of a disappointment because the market was expecting too much from it. But post this pullback, I think it's going to do bigger things. And as I said, my working target is still 2000 plus. And I'm also looking at the two other top banks, which is ICICI and SBI. I think SBI had a good move last Friday, and I think it's preparing for 1000, maybe even a 1200. And ICICI Bank has been a very quiet, clean kind of a mover over the last 6 to 8 months. So if the banks do well, ICICI will also participate.
Just, wanted to get your take on the pre-budget rally that we are seeing, at least in rail stocks. We now have a date sentimentally that perhaps gives investors an opportunity to now, put those positions in place. Are you excited about railway defense even at this stage and these levels?
No, we are not excited about railway at these levels. Again, I was speaking to my analyst over the last couple of days, and I think in terms of valuations, I think many of these stocks are still cheap. Maybe that's probably the reason, they are doing well, and they have a narrative, they have a story behind them, and now you have an event, in the next couple of weeks. I would be very selective in the railway pack. I mean, there are a couple of stocks, which can still be considered. For example, an IRCTC, hasn't done as well, but I think it has great potential over the medium term. RITES, I think, has a very good longer term setup and I think could do exceedingly well. But barring these two, I'm not very, very excited about the others because I think they've run up a lot. And for that matter, even defense. Honestly, we've taken a step back. As I said, we are going low beta now. We don't want to participate in high beta stocks anymore. I think the risks of taking aggressive longs at these levels are pretty high. So sticking to the large cap, sticking to the 4-5 sectors which I mentioned are better off.
Gautam, good morning. I wonder if IT can have a longer run after the small spurt that we've seen since Accenture numbers came out on the June 20th.
I don't think so, Niraj. I think we have a neutral stance on IT. I know it's seen a very good move after 6 months of underperformance, but we are very clear that somewhere around 38,500, the IT index could potentially top out again. And I think there are still global headwinds. I think NASDAQ has seen a vertical rally and it's also looking quite top heavy. And this whole debate about how AI is going to impact global IT and Indian IT in particular is still being discounted at the markets. So I'm not looking at IT as a 6 to 12 month trade. Yes, it's done well in the last 2 to 3 weeks. I think you should take your profits from a trading perspective and move to other sectors where there is far greater visibility.
Gautam, Thursday and Friday, I mean, pharma has had intermittent moves, but Thursday and Friday we saw some pretty strong moves in not just the Sun Pharma and the Lupins of the world, which got a double upgrade, but also a Laurus, a Granules, a Divi's. So the API, CDMO players showed a bit of a move too. Very strong the last 2 days. Is this a start or do you see some resistances?
See, the outperformers were anyway doing well. The Sun Farmers of the world have been running for the last 20 months. Cipla has been doing the same thing for the last 18 months. What has happened is that newer stocks in pharma have started to participate. And as you rightly pointed out, I think the comeback of Divi's and Laurus, and it looks like a genuine comeback this time. People have been hoping that these two stocks do well because they were the poster boys of the last pharma rally. But now I think we've seen a lovely turnaround for both these stocks and I see them doing well. I think a Divi's can easily do a 5,000. A Laurus can easily move up a 25% from here. Dr. Reddy's is among our favorites in the pharma space, and I expect that stock to gain at least 1,000 to 1,500 rupees from these prices. We recommended it last month as well. And the entire pharma index, I think irrespective of the market environment, if the markets are weak, money will flow into pharma. If the markets are strong, anyway, the momentum is very strong. And fundamentally, you can still build a case for greater strength. So I think another 15% on the upside, I think is quite likely for pharma. So one should be overweight.
Gautam, like you indicated the last time we spoke, you were fairly constructive on metals for the medium term. Like you mentioned now, there's a little bit of somber trade that we're seeing across metals over the last few weeks. Looking at the market conditions and the outlook, give me 2 or 3 metal stocks that you would still go long on, and also a quick view on gold.
Yeah, I think metals is a mega theme. I think I've been talking about this for the last 9 months. A lot of stocks did exceedingly well. And the beauty of this market is that every time you have a large move and stocks turn overbought, they just go sideways. That's exactly what happened to pharma, and that's exactly what is happening to metals. And I think it's likely to come out of a multi-week kind of a consolidation. And once that breakout happens, our NSE metals index target is about 10,700. I'm still very, very comfortable with JSPL and JSW Steel. I think these two stocks will do exceedingly well going forward. We also like SAIL and NALCO, which has been our trade for the last 6 months. And I think both these stocks will do bigger things. So, and the return of China, the comeback of China, as everybody talks about it, and we see it on the charts, the emerging market back in a sense has come back very strongly in the last couple of months, and this is also looking like a structural trend. So basically what I'm trying to say is that emerging market pack might do better than the developed world, and in that environment I think metals as a basket could do well. Coming to gold and silver, it's a huge trend. One should not miss this rally. We've been a bull for the last 1 year. Gold and silver went through a bit of a consolidation last couple of months. Nobody spoke about it. Last 2 days, both gold and silver has come back. We have lofty targets. I spoke about it in the event as well. I see gold at $3,000 at some point of time. I see silver moving to $35 and maybe even a $43. So that's 30-40% upside from current levels. So if you're taking profits in equities, which you should from time to time, go into gold and silver. I think you will generate alpha in your portfolio.
Very quickly, we've been debating over the last few weeks whether chemicals are seeing a rebound, and maybe it could be potentially a good time to start accumulating gradually. I see you go into a smirk when I said that. How do you feel about some of these specialty chemical names? I mean, Archean, a Galaxy, a Deepak Nitrate are all up 15-20% this month.
Yeah, I think they've been trying to do well for the last 3 or 4 months. There have been 3 or 4 failed attempts. This attempt is looking far more solid. And as I said, smart money seems to be chasing stocks which are good on fundamentals, which have seen valuation comfort since earnings has remained the same in the last couple of years, whereas the price have remained constant. And I think chemicals falls in that basket. But unlike 2020, 2021, you can't go out there and buy anything and everything in chemicals. I don't think that's the case. I think Aarti Industries and Deepak Nitrate have been on top of our list. So if you're looking to play chemicals, for now, I would stick to these two.
Gautam, I have one small question, and that is on gold. Splendid move. Now, if gold is constructive, can industrial metals also do the trick, or could they be under a bit of stress because there is a lot of uncertainty around China growth?
I think industrial metals would also do well. So it's an entire commodity bull trend that we are actually foreseeing over the next 6 to 12 months. In fact, I've been discussing about copper with a lot of clients over the last 1 month, and it looks like copper is also going to turn around and go back to its recent highs. But clearly, given the geopolitical risks that we live in today's world, I feel that gold and silver will be far better in terms of an opportunity. Industrial metals are more cyclical in nature, so it's very tough to get into a parabolic run for those commodities. But yes, I do see that entire commodity bull market playing out over the next 6 to 12 months. And I think this China, Hong Kong comeback, when I see the markets, it's very clear that this comeback is genuine. And I do see those markets doing exceedingly well. In fact, even if you look at Taiwan, you look at Singapore, it's now at a month high. So there is a very serious comeback which is happening in emerging markets.
Just Gautam, another space, and I'm curious to know how you think about it, is your autos, where there is a bit of a mixed kind of a view. There are concerns about inventory pile-up, etc., and already there has been a run-up. So how do you feel about the two-wheelers and the OEM space?
Well, over the weekend, we released our big picture report wherein we clearly put out that there are certain sectors in the market where one should take profits, auto being one of them. When you look at the chart, you've come to the point that the positives of the next couple of years is in the price of today. And I think that's the case for capital goods, that's the case for real estate, and that's the case for PSU in some sense, selectively. So I think these are pockets where one should take profits. I don't think they can keep running at the same pace. Whatever we had expected has happened. Right now, they're all in bonus territory, and everything is being painted with the same brush. Any market correction, and I think they can come off big. So these four segments which I mentioned, which have been the poster boys of the last 18 months, one should take profits.
All right. Thank you so much, Gautam, for speaking with us today. Always a pleasure. Gautam Shah there talking about betting on the large caps and not getting sort of carried away with what's happening in small and mid caps right now. All right, we're shifting focus. Saurabh Gupta, CFO of Dixon Technologies, is with us. We have a power-packed IMO this morning. Mr. Gupta, very good morning and welcome to NDTV Profit. Great to speak with you. Let me start with... Great. Now, so let me start with the fact that now that we have the budget date and a lot of focus on the PLI schemes, I want to get a sense from you where and what you expect in terms of announcements in the budget and on the PLI schemes as well. I mean, all over the news reports that you're talking to global players in the laptop space. Why don't you tell us more about that at the outset?
Yeah, so like any industry, we've also given a wish list to the finance minister, and there have been a lot of articles, media news lately. So we expect a couple of things. One, we expect that the reduced taxation rate of 15%, which was earlier applicable and later on it was last financial year or this financial year it ended. We want the government to renew it for the manufacturing sector. So a reduced taxation of 15% should come in for the manufacturing companies. Second, I would say that a lot of PLIs have been there for the finished products. So we expect that the government might come out with another PLI for specifically for electronic components, critical electronic components, because a large part of imports is still being done through of those electronic components. So we expect that the government will come out with a PLI for electronic components. So these are the two things which we expect, and among a lot of smaller things as well. Yeah.
Okay, let me come to what is happening with Dixon right now, and I think the latest comment that I've seen of yours everywhere, Saurabh, is about how you are in conversation with global players for IT hardware segment. Can you elaborate on that?
Yeah, so IT hardware is a large opportunity for us after mobiles. Clearly, there's a lot of import substitution opportunity in India. And government has brought about two things in order to incentivize domestic manufacturing. One, they have made the PLI more attractive by increasing the budgetary outlay. And also they have put some kind of a restriction on imports. Of course, that has been extended, but hopefully by October, that restriction should come into the place. For us, we have already signed contracts with Lenovo and Acer, which are, of course, have decent market shares in the Indian IT industry. And we are in discussion with more global brands. So for some of them, we will start the production this year. And for some of the global brands that we are in discussion, hopefully we should start the production by next financial year.
Morning, Niraj here.
Hi, Niraj. Good morning.
This whole thing around mobiles, right? There is some conversation around display modules and a partnership and manufacturing there. And just the overall production of mobile and the share of mobiles in your books aids revenue. Will you be able to contain the dip in margins out there in that business? And two, anything on the anvil that is really large, which you are pursuing and you can share with us will be great on the mobile side.
Yeah, so mobile, Niraj, we have put a capacity which is almost 50% of the total Android market in India. And we have a very strong order book. So this year we are looking at 29 million phones as compared to 6.97 million smartphones that we did last year. And hopefully those numbers should grow for us in next financial year as well. We have ramped up for some of the customers and we are in the process of adding some more large customers. Some of them, the production should happen in the second half of this financial year, which will of course give us numbers for full year numbers for next financial year. So mobile, the biggest thing, of course, from addition of more players in this category, we think the mobile display is a large opportunity for us. There's a big business case because of the duty arbitrage. and you already have a large customer base. So that mobile display project that we have signed up, and hopefully it should start reflecting in the numbers from next financial year, that will be very much highly margin accretive for us, with strong ROCs and very quick paybacks for us. And similarly, we look at getting into more components in mobiles, because that is the largest play. So you will see more such partnerships and JVs on component side as far as the mobiles is concerned. The other big piece is, I mentioned to you that we are in discussion with large global brands on IT hardware side. So IT hardware over a period of time, over the next 2 years, can also become a large opportunity for us.
Unfortunately, we are short of time, but it's also Samina joining in. I know recently you've talked about how growth is going to come in through joint ventures as opposed to acquisitions, because of course the price tag is much lower there. Give me a sense of what is happening on the HKC JV. Is it margin accretive? And also going into the next couple of years, so if you look out maybe 2 to 3 years, what is your revenue mix going to look like? Because I know there's a entry into refrigerators, the new products added to your JV with Airtel means a 200-250% sort of growth. I mean, these are phenomenal numbers, but for the business, top 3 revenue generators and our update on HKC.
Yeah, so top 3 revenue generators clearly will be led by mobiles, and this year it will be consumer electronics, LED TV as a category. Hopefully in the next few years, I think so after mobiles, IT hardware can become a large opportunity for us, and it should be the second largest contributor to mobiles. HKC JV HKC is one of the largest display manufacturing company globally. So we are looking to set up a large capacity of almost 20-25 million for mobile display. Later in the second phase, we will take the mobile display to around 45 million and also get into the IT hardware display, because that's also required as part of the IT hardware PLI. And also you can look into getting into other display categories, because HKC as a company is into displays for all kind of products. So that will be really highly margin accretive. So yes, mobile as a business, it is a slightly lower EBITDA margin, but when you get into components, it helps generate that additional margin. And also at the simultaneously, you're getting into categories like refrigerators, where again, we've got a large order book. Again, it's an ODM business for us, which also generates that 9.5% margin for us. So there are a lot of businesses which are, of course, margin accretive, and there's some businesses which will pull down the margins, but we hope to maintain margins at around sub 4% even for this financial year.
Saurabh, would have loved to talk more, but I understand we'll save some ammo for when you come out with your numbers and officially can talk numbers. But, well, kudos to you guys on doing the job that you're doing. All the best with the quarters ahead.
Thanks a lot, Niraj. Thank you.
That's Dixon. And 4x the capacity on mobiles relative to the numbers that they clocked in last year. That's some telling. Okay, let's see how soon the capacity ramp up happens. But on that note, I must say that the markets have completely come off about 0.15%. So nothing dramatic, but all key indices in the red, with the Nifty Bank leading the charge and volatility up in trade today. We wrap it up on this leg of India Markets Open. Up next, Talking Point, Sandeep Bhatia of Macquarie joins us.